Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it turned out to be a terrific Tuesday in the sense that it's the fourth straight record high for the Nifty. It shut shop above that 23,550 mark, but made a fresh record of 23,579 that was clocked in intraday trade. Sensex as well managed to close above that 77,300 level, and 77,366 is the new high on the index. Broader markets continue to outperform, with the small cap index up somewhere around 1% or thereabouts. Remember, last week as well there was outperformance coming in from the broader end of the markets, with both the Nifty mid and small cap indices gaining somewhere between 4.5 to 5.5% for the week. Advance decline ratio was firmly in favor of the gainers at 3:2 on the NSE. In fact, the Nifty Bank index, that has also managed to close above that 55,200 mark. I beg your pardon, 50,200 mark. It has surged somewhere around 400 points. Second half is when we saw traction building up in the Nifty Bank index. So 50,200 was being looked upon as a strong resistance zone for the Nifty Bank index. It has managed to shut shop above that. 50,400 is where it has shut shop for the day. As I was mentioning, banks saw traction, and so did IT and realty stocks. Realty, by the way, was the top sectoral performer for last week. It had gained somewhere around 5% or thereabouts, and the outperformance continues there. Aside of that, what didn't do well was the entire consumption pack. So auto, FMCG, they were under some bit of selling pressure, and so were metals as well as pharma. But in terms of individual movers, you have PSU stocks continue to do well. So Power Grid was the top performer on the Nifty. Aside of that, Wipro saw some buying interest, and so did Titan, ICICI Bank, Tata Consumer and M&M were some of the other gainers. What didn't do well today was Maruti. That stock was the top Nifty loser. Aside of that, you had Dr. Reddy's, Tata Steel, Ultratech Cement, Hero Moto. These were among the stocks that saw some bit of a selling pressure in today's session. But defense continues to be the theme. If you look at the likes of GRSE, Paras Defense, all of these stocks were buzzing, and how Cochin Shipyard as well. Aside of that, you had Fact, MMTC, Metro Brands, RK Forgings. These are some of the top performers on the Nifty 500 index. On the losing end, you had Kalpataru Project. Of course, there was a block deal in the counter, and reports suggest that promoters may have pared stake via the block deal. So that stock was among the Nifty 500 losers. So was Chemplast, Lemon Tree, KNR Constructions. These are some of the other losers. But let's bring on board our guest for today. Joining me is Jay Thakkar, who is the head Derivatives and Quant Research at ICICI Securities. Jay, thanks a lot for taking out time and joining in this afternoon. Fourth straight day of record highs for the Nifty. Do you think we are topping out? What are the levels you'll be watching out for? And how would you really position yourself now?
Hi, very good afternoon to you, Nandita. Pleasure to be on your show again. And I would say that the close has been really good, and it's been quite positive. This is what actually the index really required, Nandita. I mean, a breakout above the levels of that previous swing highs, 22,500. More importantly, the reason being is that since the start of this calendar year, Nandita, what we've seen is that Nifty has been moving up in an upward sloping parallel channel. Most of the times we have seen, or almost all the time we have seen prior to this breakout, is that Nifty had moved to its previous swing high, moved beyond those levels, did not sustain much, and we saw some profit booking coming from those levels, and that's how this pattern had formed, that an upward sloping channel where Nifty makes a new high by a couple of points that comes down, right? But this time around, it seems to be continuing its trend. I mean, it has surpassed the levels of the exit pool highs, and it's closed well beyond those levels. I mean, not for the first time today. I mean, since past couple of days, although it was not moving much, but today it has in fact shown a good 0.5% move or so. Today was the Nifty expiry. So after the long weekend in this truncated week, with the support of the global markets as well, we saw that Nifty in fact managed to close about 22,500, quite importantly, and the Bank Nifty, which has yet not formed a lifetime high as relative to that of the broader indices like mid and small cap Nifty, or maybe mid cap select Nifty, all of them have created those lifetime highs. The Bank Nifty is still struggling to do so, but then The entire last week, Bank Nifty spent the time within 50,000 to 250, 300 on the upside to 49,500. Eventually, it has broken out and closed above those levels out there. So, I think yes, the breakout has come in Nifty and Bank Nifty should sustain now. 22,300, 400 now seems to be very crucial support on Nifty. Till those levels are held, probably by the time of expiry we see 23,700. Yeah.
Right, but do you think 23,600 is just about around the corner? Do you think that would be clocked this week itself? Because we came pretty close to that level today itself.
Yeah, that's quite possible. See, Nandita, I'll tell you that, we have a good derivatives data backing that as well. I mean, on the lower side, if you see then we have seen good put writing happening. I mean, that's good additions at the levels of, say, 22,500 strike. We have seen a good unwinding coming in the call strike side on 23,400 and 500 strikes. So there has been a good call unwinding there. Put additions there, which has got back the PCR well above 1 is trading at 1.20 approximately. We have got a close well above the max pin level of Nifty, which is at 23,500. So that's another positive. Nifty is trading well above is the monthly VWAP, or you say the weekly VWAP levels as well. So those are the good support levels at the lower end. So if at all there is any day, it will be bought into, which will help Nifty again to bounce back. I think that for this week, I mean, or maybe for this monthly expiry, taking 24,000 would be difficult, or can be difficult, maybe, which is 450 points away from here. But then surpassing 23,600 and inching towards 23,700 at least until the expiry, I mean, this Thursday, should not be a problem.
All right, watch out for those levels on the Nifty then. But let's talk about some specific stocks then. On a day when auto index was out of favor, we saw M&M once again hitting fresh highs, right? There is news flow around this stock. Of course, we saw the stock overtake Tata Motors in terms of market capitalization on Friday as well. So it has been consistently making 52-week highs. Here on 3,013, that's the level, that's the 52-week high. Would you expect higher levels? Would you say it's approaching some bit of an overbought zone? Or do you think there is more to come before it hits that zone really?
See, as of now, I mean, it's definitely trading at its lifetime highs. The momentum also, I mean, I would say it's trading at the lifetime high, not only on the daily charts. Look at the daily to weekly, monthly charts as well. I mean, the momentum of M&M is definitely trading at the higher end of the range. I mean, even if you look at the quarterly charts, and this has been one of the best kind of a run coming for M&M post, say, the rally which had come, say, from 2005 to 2007, or probably, during the period of, say, 2002 to 2004. I mean, that kind of a move is what M&M has seen or witnessed in this recent period. So, yes, the momentum is a bit overbought, but then there is no such signature, Nandita, of any such reversal in the price structure. So, the stocks continuously forming high tops, high bottom. I mean, there is no such negation of the same. There is no negative divergence on the indicators. Along with the price, the momentum is also moving up. So until now, there is no such deviation wherein I can come and say that it's too low to sell it. I mean, there is no such indication from the derivatives data as well. So if someone finds it overbought or maybe not that cheap or maybe relatively too costlier at these levels, one may avoid but not short sell unless you got that kind of evidence.
But what about shipbuilding stocks? I mean, they have been flying off, and how, the likes of Paras Defence, GRSC, Cochin Shipyard, you've seen these stocks hitting highs consistently, right? And today, in fact, Paras Defence was up somewhere around 20% or thereabouts, up 55% in just 3 sessions. How would you really trade into these stocks now? Would you say that, if you have positions, congratulations, time to take some profits? And if you have missed the bus, too expensive to get in, how would the approach be?
Yeah, so one, Nandita definitely has to look stock specifically, because see, after you got 55-60% kind of a sort of a move in 3 days, definitely it would not be a good risk reward for a fresh entrant. So I'm with you on that, and that would be for any such stocks in the market. I mean, one has to take a pause. I mean, one could not be carried away by the war. One cannot just hurry. Herd mentality basically hits when it comes down, create that kind of a fall in your portfolio. So yes, Paras has done good technically. The stock had a good structure. It had from a good inverse head and shoulders pattern, a bullish pattern, a good breakout from those levels, from the neckline of that pattern with increasing volume. So it had got technical good structure, base structure from which it has come out. But then overall sector is doing good. So you name it and you've got the stocks doing good. So maybe GRSC or maybe Cochin Shipyard and all of that. And I think yes, the momentum is yet to continue. So if you get a good chance and it did, if at all, in this kind of sector or the stock, definitely you can pick and choose. Paras is good from the long-term point of view. So is GRSC, and Cochin Shipyard has gone up quite a lot. From these levels. So I think that the risk reward gain may not be favored right now. But then overall, shipbuilding you see, or maybe defense you see as a overall sector, the momentum is absolutely in favor of the pulls out there. So one has to be looking out for the opportunities and get into it, not worrying much about the downside as of now.
All right, that's about the defense stocks that have been soaring in trade over the last few sessions. But about GMR airports, there was some data with respect to passenger traffic as well as aircraft movement that came out in the second half of the day. But recently, Jefferies had also reiterated its bullish call on the stock on the back of rising passenger traffic, and it said that it sees somewhere around 10% upside on the stock. The stock has been in the F&O ban, on and off. Here, are you spotting a trade?
Yeah, of course. See, this stock has really broken out from a sideways consolidation. It was consolidating within a range of 70 to 90, approximately, you can say, of 20 points. And about 1992 levels is heading towards 110, 112 levels. So there's still good upside potential from these levels of around 10 to 15%. And as we got a good risk reward, it's swaying around the levels of 97, 98. If the support is at the range of 1992 and target of 110 or 115 range, then there's good risk reward out here. The momentum is actually bullish. We have seen a continuation of on the upside. We have seen a good long wheel happening in the stock. In fact, as you said, that the stock was in F&O ban, but then I think the market-wide position limit maybe has come down today, so it may exit from the F&O ban, if not today, then tomorrow. Okay. So one can definitely look out for a good possible entry out here in GMR Infra.
Right, that's about GMR, but another stock that has been reacting to news flow is IIFL Finance. Numbers came out, they weren't all that encouraging, but the good part is that the RBI has completed the special audit of gold loans, right? That's a big overhang being removed from the stock, although it did go up by 4 to 5%, but still, the shares are down somewhere around 27% from 52-week highs. Are you spotting any kind of reversal after today's move on the charts?
Well, I would say the short-term reversal has come in this stock, Nandita. It's been long. We saw this stock performing quite well 2 weeks back as well. When it provided a breakout above the levels of, say, 400, 420 range. That's somewhere at the start of this month, around the first week of June, is where we saw the stock actually breaking out from its short-term downtrend and went on the upward trend. We are seeing some short-term trend continuation on the upside, and I think that till 460 levels are held, there is a good possibility that it can fill up the gap on the upside, maybe until the levels of 540, 550. So it had come down with the circuit filters been active for 2 or 3 trading sessions on it, when the RBI had actually imposed those things on the ILF and finance, and from there it had fallen from 570. 850 until straight to 415. So now it's trading above those levels, 460, immediate support. If those levels are held or till those levels are held, it may fill up the gap of the upside.
All right, just a couple of more stocks. From the new age pack, Nykaa. The stock hasn't done much in the last 1 month. There has been a business update by the management wherein that they have guided for strong growth and moderating capex. Fashion arm that was kind of an overhang is expected to see EBITDA break even in FY26, and the beauty and personal care segment that is driving growth for the company. There, the company will be aiming for a gross merchandise value of somewhere around 25 to 27%, mid to high 20s. Stock hasn't done much, as I said, over the last 1 month, wherein on the other hand, you've seen Paytm. That stock has gained 18% in the last 1 month, right? But today, of course, it has snapped its gaining streak. Between these two, would you suggest trading into any of them?
Well, Nika, then I would say that has been, struggling to actually, gain that upward momentum in the short term. I mean, it's been trading within that range of say 150, 190, and I think that till we don't see a meaningful breakout coming out from this range, that would not be a good trade out here. So I would like to avoid these stocks as of now, and we are not seeing a clear momentum building, at least in the short term.
All right. Lastly, HDFC Bank. Given the fact that Nifty Bank Index has seen or has regained momentum, would you say that this is the time to buy HDFC Bank in a staggered manner, or would you say that stick to PSUs that have been doing well anyway? So, would you perhaps prefer an SBI over HDFC Bank? What's your advice?
From a trading point of view, HDFC is not a problem. I mean, I'm sure that many of the DIs are making good money out here because they are the ones that bought it at a very lower levels when the stock was falling. Post results, so probably many of the retail traders in anticipation of a bounce back finally gonna up move. I would say a sigh of relief, because it fell in somewhere in Jan and Feb, and post that, if you see, it's been almost 3 months when Nifty or the index has been going higher, but the stock was not, and finally not only surpassed 1500, but it has surpassed 1600 as well. So the way the short-term momentum has actually come back into the stock. Looking at that, I believe that there is definitely a good trading opportunity. At least a bounce till 1680, 1700 can't be ruled out. So those are the levels you can watch out for going forward. I mean, I don't see this stock now falling immediately below the levels of 1550, 1530 zone, and it may head towards say 1680, 1700. Now, if you ask me that from the point of view of investment, I mean, that long-term breakout on HDFC Bank would be confirmed above the levels of 1750, 1800 levels. So it can go and test those levels. One can review at those levels wherein one can continue keep holding it for the long term.
Right, that's the view on HDFC Bank. But as I wrap up, Jay, anything on your radar with a 1 to 2 week perspective?
Yes, also see, I think that Divi's Labs is one stock from the pharma pack which has really done good, and I think that from here on as well, I mean, to get any dip in Divi's Labs should definitely be used as a buying opportunity. I mean, this whole series we have seen a good momentum getting built up here. It's just that it has got a small resistance around the levels of 4650 or so. It will test those levels most likely, surpasses those levels, then there will be a further momentum at least until the levels of 4800, 4900. And secondly, it's Reliance Industries. I mean, it's now the time for this stock to provide a breakout from here on, because we've seen the likes of HDFC Bank as well, after months of underperformance, has come back into the momentum, which is helping Bank Nifty to now inch higher towards this lifetime high. I think Reliance Industries from the refinery sector, I mean, this is one stock which is unable to sustain above the levels of 3000. I think this time around there is a good risk reward, there is a good opportunity, there is a good chance since the momentum is back into the market. So I think Reliance has got a good support around the levels of 2900. Positionally, if not this series, I think that next series we will see Reliance inching towards 3100 plus levels, and that will help Nifty to move higher.
All right, Divi's Lab and Reliance Industries, 2 recommendations coming in from Jay. But Jay, in terms of an FNO strategy until the monthly expiry, what would you suggest?
As on the index?
Yeah, on the index.
So I would be bullish on both the Nifty and Bank Nifty. So I would recommend a bull call spread out here. I mean, Nifty is trading at around the levels of 2360, 23,560. So what one can do is obviously one can buy one atomic call option of monthly series. That's at 23,550. So that's trading around the levels of say 178, and one can sell say 23,700 strike call option. So that's trading at around 104, Nandita. So the net outflow of yours would be 70 points, the inflow would be 80 points. So there's a good 1:1 risk reward out there on Nifty. And on Bank Nifty too, I would recommend a good blue call spread. Here the opportunity is that one can do it for 26th expiry, because Bank Nifty's expiry is now happening every Wednesday, monthly expiry. So for the 26th of June, one can buy 50,500 strike call option. Nandita, this is trading around the levels of 379, 380 approximately, and one can sell 51,000 strike per option. So if you see the net outflow here would be 379 minus 181, so that would be 198 points, approximately say 200, and maximum gain would be 300. So we've got a good risk reward of 1 to 1.5 still, despite that's just 1 week to expire.
All right, that's the FNO strategy to adopt. With that, Jay, thanks a lot for taking out time and sharing your thoughts with us. It's always a pleasure to chatting with you, and of course, getting all these stock-related insights from you.
Thank you.
Well, with that, we've come to the end of this edition of Closing Bell. Of course, we have shut shop, around the day's high. So 23,557 is where we shut shop. Another record close for the benchmarks. In fact, broader end of the market's also fairly buoyant. But let's hope that the momentum continues into tomorrow as well. And 23,600 is one level to watch out for on the higher side going forward. But from me and the entire team, thanks a lot for tuning in. You guys stay tuned to Moneycontrol for all your other news and updates.